So the state of the market at the moment is that it's been a pretty good 12 months to this point. The index overall is up about 23%, but within that there's quite a bit of divergence. The industrials are up 33%, add on a dividend, and we're near 40% for the industrials. So that's a great return over the last 12 months. The resources, meanwhile, though, the big mining companies overall for that index is down 3%. So quite a divergent point, and this, it's quite an interesting where we are. This is I think we're at a very sort of fork in the road, if you like, for the market, because clearly the industrials, after such a great run, nearly 40%, can't sort of sustain these kind of rallies. We've seen, you know, the love affair for yield, the chase for yield. Yield has always been the way Perpetual has invested, so it's quite disconcerting when our own investment sort of philosophy becomes flavour of the month, and it's a strange thing for us because we're not used to being flavour of the month. We've taken the opportunity in the industrial space to sell down some of our bigger holdings, taking profits where we think valuations have reached fair levels, but we haven't sold completely out a lot of these names because basically we haven't got any other better idea or quality idea to invest with the proceeds from selling down. But we've certainly taken profits. Our cash balances have risen a little bit, and we're now waiting for better opportunities to present themselves. And what we've seen in the last 2 weeks is those opportunities have started to come through. The market's been under a bit of pressure, and really that's been driven by, I think, the fact that, you know, the chase for yield can't keep going on. I mean, it's interesting. Telstra, a stock that we've been big in for a long time, you know, 3 years ago, you know, it was the worst company in the world. It was yielding 10% plus franking and was trading below $3. Today, it's nearly $5. It's the greatest thing since sliced bread. It's yielding 6%. But within that time period, the earnings have not changed one bit. It's all been sentiment driven. So, you know, it's unrealistic, I think, to think that, you know, the yield trade can continue. So where does that leave us then in terms of mining? Is mining now the place that's going to have to drive the market? But here things actually don't look, don't look too rosy either. The big mining companies are putting pressure on a lot of their suppliers. We've seen mining services companies being decimated in the last month or so as the market's come to realise that the slowdown in China is real. You know, the best days for commodity pricing are probably over, and it's a bit of a tougher game from here. So we're looking through that area to find opportunities. But again, we're hanging on to our quality names in the portfolio because we're just not finding those really those opportunities that would make us sell harder. So where to from here? I think the interesting thing is that we've had a lot of we've had interest rate cuts, and so at some point these will take hold in the economy. But in the short term, things still look a bit difficult. You know, we've got the retail sector under pressure. We've got the media sector under pressure. The mining services businesses I talked about under a lot of pressure. There's a lot of pressure out there in a lot of sectors in the country, and it's going to take some time before I think the confidence of the interest rate cuts start to flow through to building and construction. But we really need to see this happen, get some profit growth into companies, and then the market can look forward and say, well, hang on, there's profit growth occurring to take the market higher. So we feel that the market is now in a bit of a holding pattern, and really looking for that next sort of direction, indication that to take it the next step. I think the quality industrials will still be sought after, and again we're well placed in that whilst we're sifting through the opportunities that have come about through the absolute, as I mentioned, decimation of the mining services businesses. And so we're picking the eyes through that, looking around for the best companies we can in that sector.